Good morning, everybody. Hope you had a great evening. It was a hot one here in Wichita, and we had winds 20, gusts to 38 yesterday afternoon and evening. So felt like living down on the Texas-Mexican border. I can remember when I was in pilot trading in Laredo, Texas, of all places. And Nuevo Laredo was a dangerous place back in those days, but it wasn't from drug dealers. It was from guys trying to get to your wallet one way or the other. But I can remember sitting on the stoop at the BOQ 11:30 at night, winds blowing 30 miles an hour at 90, 92 degrees. So very reminiscent of my days in South Texas. Today is the FOMC meeting. It usually freezes activity. It yields a trading range market with sellers just outside of near resistance and buyers below near support. I'm going to do a London split, and then we'll do an X split right here, and then we'll talk about what we can expect. There's pretty good selling above 124.02, and there's pretty good buying beneath 123.27. So I think we got really good support, or we have. If my wife were around, I'd have to do that. 24 to 28. So we're going to make buy 1, 25 to 29, and then buy 2, 17 to 21. On the sell side, we have a high of 2.5. We have this bill from 7, so we'll make a sell 2 to 6, leaning against 8 in current resistance, and it'll give us a little room for a setup. And then we have the high yesterday at 13, so 12.5, 13. So we'll make this sell 9 to 13, let them get stops above 12, and we'll see how it plays. We got trade balance, a current account balance minus 97.8. I love the precision of these forecasts, don't you? Then we have crude inventories minus 0.6 million barrels, and then FOMC unchanged. Minus $10 billion comes out of the quantitative easing program, and then interest rates the same. The Janet Yellen press conference at 2:30 Eastern will be highly scrutinized. They'll be looking for forward guidance from the Fed when they might raise interest rates, what it might take for them to move in either direction economically. My guess is Janet says they're concerned about jobs, they're concerned about the growth rate, might mention the housing sector, but on balance they're looking for modest to moderate economic growth, getting better from the second quarter on this year. The IMF cut the growth rate from 2.8% for this year to 2%. So again, all these organizations usually forecast better than actual way it turns out economic forecasts. They have to. I mean, they can't come up there and say, economy's going to hell in a handbag, the bottom's falling out of the market, woe is us. Get them in trouble with the people that gave them their jobs, so to speak, and that fund what they're doing. So I'm not saying it's a fantasy, I'm not saying it's a fable, but it's just kind of the way it works, and you have to understand that whatever the growth rate will be is what it will be. There's not a hell of a lot you can do about it. You can pray it up, you can talk it up and the rest of it, but then it actually happens. And my guess, these as usual, these numbers come in a little lower than forecast. So let's look for the market to be on hold. We're going to take a trader's approach to it. We're going to sell into resistance. We're going to buy into support and then see what happens. Looking at the 30-year, the knob spread pretty much where it was on yesterday's close, but it has come in quite a bit from last Friday. The 10-year option play is 23.5 to 24.5 into expiration right now, all subject to change, and the 30-year is 35 to 37, a little bit wider. Okay, we have a profile that volume-wise leans P, TPO-wise or time-wise leans B, and those two tend to yield the trading range. So we've got stops below the low at 30. We've got the buck. We have yesterday's lows at 01, so we'll make 35.01, 29 to 01 buy one. Might do a little better than that, than 21 to 25, but with the knob spread where it is, holding in from yesterday, I don't know if we can get a little extra volatility to the downside. On the last rotate up was at 19, then we had 12, so then we had 11, and we've got volume at 7, so it is a very, very aggressive sell, but 7 to 11 is sell 1, and sell 2 will be 15 to 19. And we'll see how that plays. Okay, gold pretty much is where it was last night. Internationally, the big refinery that we've been talking about north of Baghdad is on fire. You know what? It is so easy to break things. I mean, if you have ever been in business yourself, I mean, I'm absolutely appalled at the money these large corporations that really own franchises on whatever it is they make, and you know, there's 1,000 of them in the world that really, if they totally screwed up for the next 50 years, they would still be selling product. But to see the waste that goes on and to see how long it takes to build something and how easy it is to destroy, and then you have these rebels coming in and they'll take out an oil refinery that might take a couple of years to rebuild in peacetime, let alone wartime. And I mean, it's just easy to break everything. It's easy to break society. You know, with the idea, yeah, we're going to break it, but we're going to put it back to better than it was. Where has that happened? I mean, where has there been an improvement once you've broken society? I mean, few and far between. Japan and Germany, and it took the United States being there 50, 60 years back, we're still there to make sure the natural tendencies don't emerge. So these rebels coming down into Iraq can have immense impact, and 2.5 million barrels a day is what Iraq puts onto the oil markets, and if that infrastructure, if that comes out, then the price of oil can go a hell of a lot higher than $116 a barrel, which is where they say it's going right now. Now, I don't know if it gets there or not, but it'd be pretty easy to get there with one headline out of Iraq. So gold pretty much maintained its own yesterday. In gold, when we left, we were hoping to buy the 65, 67 area, and we just touched it overnight. And we had a sell at 72 to 75, and we just touched that overnight. Are we good or what? But again, trading range market until the Fed speaks. And a cut in QE would be negative for gold, leaving QE where it is right. I mean, if they didn't cut $10 billion from it, it would be positive for gold. The interest rate, I don't think, will change. So we're going to keep the same number, 72, 75, 79.81 for sell 2. On the buy side, 65, 67. And 60, 62, leaning against this high volume number for buy 2. For our European contingent, there, with patience, there's a lot of money to be made in the overnight session. You got to keep your damn hand off the mouse, and that's hard to do. But if you don't get out there and actively trying to push the market with your orders, then it can be very, very rewarding. The euro's up, the dollar is down. One day the dollar's up, the next day it's down. That's the pattern. And both the yen and the euro are up. And every other day, that's the way it trades. So we got a very, very tight trading range. Nothing going on in the euro, and I expect it to be that way till the announcement. Okay, $10 billion cut in the Fed's QE program would be a slight negative for the euro. We're printing less money than Europe is at the moment. Europe's on the way to easing more. We're tightening a little bit, at least on paper, the headline basis. So I think we are where we are. We're going to be selling the 75 to 85 area. Then basically 136 even. And on the buy side, we're going to be buying 40 to 50. And then 20 to 30. And don't look for much at all. If you're really, really going to take advantage of the huge moves in the euro, you really have to be on London time. A couple, 3 times a month, we get a huge move in the day session, but that's pretty rare. Usually the move is over by the time it gets to us. Crude oil. Again, peace in Iraq, no threat to the pipelines, caps us in that 107 area, refineries on fire, bad guys, or the worst guys, marching on Baghdad. I guess it would be probably a proper characterization. We'll take it up. Okay, 50 to 75, 107, 107 and a quarter, sell 2. Volume moved up overnight. Volume essentially held over here. So this 107 area, this volume right up here is the ideal place to put this trade on. Obviously, we got to get through yesterday's high. So there's your first resistance. That's 1. This is 2. On the buy side, we have volume down here at 95. We're at 17, so 75 to the buck, buy 1. And then 25 to 50, buy 2. Now on to everybody's favorite market. The E-mini is going to be like the note. It was quieter than the note overnight, actually. Very, very compressed trading range. Not a lot going on. And the reason for that is today's FOMC announcement. Large institutions give up trade location for fundamental insights fundamental knowledge into the market. And the Fed is the stock market. Central banks are the stock market. So what they say and what they do is critical in their long-term thinking. And these guys know since March of 2009 that the stock market has been higher because of the Fed's overt and covert support for the market. So what they're looking for is continuation right here. And as long as the Fed is cutting their support for the market in an orderly way and the U.S. economy is showing modest economic growth, no matter what the underlying numbers are in the headlines, they can play from the long side. And it is a musical chairs game, just like the mortgage-backed security game was in 2008. They hope to be smart enough not to be the last one standing when the music stops. Today's trade current account balance minus 97.8 should not be a factor. Probably will be taken as a little bit bullish because it's below 100 billion. Crude inventories minus 0.6 million barrels. And then the piece of news that keeps us in a trading range today. Now, if this market breaks out or moves in a big way directionally, somebody knows what the hell's going on. They usually hold that news until, a minute, 30 seconds in front of the announcement. But if it's generally leaked, more players will get it and they'll position before the news. So we're really in a situation where resistance is 35, 37, and sell failure to take that out, and then 39 to 41. Getting stops above the overnight session high, yesterday's high, I think is within reach. Last rotate down yesterday stopped at 31. You have an F period low at 29, so this 29 to 31. Buy 1, and then we have our 24, 26 for buy 2. And we'll look to sell failure to extend the range above and hold yesterday's highs, and we'll look to be buying really in that probably 25, 27 area. Like to, but we may have to pay up to get in. So that's it. It'll take at least 15 minutes to get everything up and posted. I will get busy on that right now. And like our buy 2 and sell 2 points better, as always. We'll see how she plays out. Back as soon as I get back up. Later.